I'm going to record now.
Okay.
I think we are on.
Button's on. So yeah, I see a red button. So
awesome. All right. Well, thank you so much, Dat, for joining me today. And this is Shelly. I'm the project woman, and I have Dat Vong, right?
It's Dat Vong, but that's fine. Yeah.
Okay. Got it. Good clarification.
No, you're okay.
So today, I think a lot of people have been asking me a lot about mortgage loan, and obviously I'm in real estate, and you're also in the lending business. So thank you so much for joining me today, because we're going to be talking about just mortgage loans that are out there. What are some of the unique programs or special programs that are being offered right now, and the real estate market in general. And things are just so crazy out there right now. So we're going to just really kind of just have a casual conversation about what should people be thinking about, and when they're actually getting ready to purchase their first home, or a rental property, an investment property, or even a commercial property. So, but before I jump into the questions, I really want you to introduce yourself and where you are, where you're from, your background, your history. So those that don't know you will know you.
So, well, my name is Dat Vong, and I'm with Nexa Mortgage. My background in Fresno is my hometown. I did go away for college, but I'm back here helping my neighbors. I've been in the business almost 3 years, so I'm fairly new, but I was fortunate enough to join Nexa. We are a brokerage, so it gives me a lot more opportunities to help my clients, and we do have a lot more programs too. So, pre-COVID, we definitely had a lot of options. During COVID, we're limited, just like with every lender. There's a lot of overlays on the guidelines. But as of right now, a lot of the overlays are lifted. So we are, let's say, 90% back to where we were pre-COVID. There's definitely a couple little things that haven't opened up yet. But we are definitely back in the market. We're doing really big numbers here too at Nexa. So. Yeah.
Sounds like you guys are back up and running.
Yeah. Yeah. So we're pretty much full steam ahead. So we're doing pretty good over here.
That's awesome. That's awesome. I have to say, I think that we were, from the residential and the commercial side of things, we saw a huge slowdown right when COVID happened, right in March, and all through to end of May, and June start towards the technically almost like I feel like the last week of right after Memorial weekend, we saw this huge surge in interest to buy from buyers, existing buyers that were on the sideline because of the whole COVID shutdown, as well as new buyers that are coming into the market. And so as a result of all that, I've seen a lot of people that have came in with that have actually spoken with a lender already, and then people that are wanting to buy that haven't spoken with the lender. So maybe if you can dive in and share with us what kind of loan programs are out there right now for people if they're interested in buying a primary resident home for themselves and their family.
Okay, so we are actually, for the non-QMs, all our products are starting to come back. There for a good period of time. A lot of the jumbos were not funding. A lot of the bank statements or non-QM products were not funded. But so we are back. We have the jumbos. We have the bank statements at 12 months, 4 months. We have the DSCR. They're back as well too for a lot of investors that are that can't really show income on the tax returns. The DSCR investors are a really good program, and we are back with that as well too. So. That is a huge niche program that we offer. And then also within, we also have the ARMs, the 3-1s, the 5-1s, 7-1s, 10-1s. Pretty much all the non-QM products that were, that disappeared during the COVID-19 are essentially back. So, and then when you're talking about first-time home buyers, we have, we have CalHAF, Genoa. AFR has a good down payment assistance program, but they also have a program that would help first responders or anybody in the medical field, educators, military. So they have a really good program over there as well too. So.
Maybe elaborate a little bit on like those first responder assistance, because I know that that's definitely something that's big right now. I mean, we're dealing with COVID. We're hearing on the news first responder. What does that mean when a well, what's the definition of a first responder, and what does that mean if they're out there trying to get a loan or we're getting ready to purchase their first home and need a loan? How can lenders help them?
Okay, so first responders, in the beginning, I thought it was going to be firefighters, policemen, or EMTs, anybody that would get to the accident or issues up front. But I do have a CO that qualifies for a first responder as well too. So there's a lot of definitions when it comes to first responders. I do have to talk to the borrower, see if they do qualify for that particular program. But the options are there if they need that. So, and usually it covers just like a first-time home buyer, it'd be like 3.5% or whatever that entry down payment would be. That the AFR would help them out.
So it's essentially they're getting just a 3.5% down payment, but is that assistance equal to 3.5%?
Right.
Okay.
So essentially, it's kind of like a first-time home buyer with an FHA, but you get that assistance with whether you're a medical or first responder or military or an educator.
Okay. I think sometimes what we see is that oftentimes when there is an assistant, whether it's on the down payment or on the closing, the rate will be slightly higher. Is that something that's normal or?
Okay, so with the AFR program, they will actually follow your loan for 36 months. If you're on time and everything is, at par, they're actually going to forgive that. So, and then somewhere along the line, if you do have a missed payment, then they would start the clock all over again for 36 months. So, I believe there is a time gap, not a time gap, but I think it's up to 5 years or so. If you go past the 5 years and you don't stay consistent with the 36 months, I think you do have to pay that back at the end. But for the most part, it is a good little program to get into if you're in those line of work.
So let me make sure I understand this. So if you're a first responder, you can take a loan that's requiring 3.5% down, and there will be assistance. So essentially like a grant per se.
Right.
Of 3.5%. So really, you're not putting anything down in terms of your down payment. The assistants come in and replace that 3.5%, but you will hold on to that loan for like 36 months. Is that right?
Well, so I don't hold the loan for 36 months or not Nexa, but the AFR, which is the lender that we use.
Mm-hmm.
So remember, we are brokers, so we broker this out. So
yeah.
AFR is going to monitor that loan and make sure you're up to date. So with that being said, it just depends on the scenario of the borrower. I mean, if you're military and you don't really need the 3.5%, you could probably use it towards closing costs or what have not. So it's not necessarily a down payment, but it is like a grant program, like you said. But it's really up to the borrower to what they use it for, whether it be closing costs or down payment. So.
Got it. So it's not just down payment. It's essentially 3.5% of your purchase price, either towards down payment or towards closing costs, whichever way you prefer. So.
Right. So obviously with with first responders and military or educators, if they're not really first-time home buyers, and that 3.5% doesn't qualify for the first-time home buyer. Okay. So they can use that towards the closing costs.
Got it. Awesome. So I think you did mention teachers and at one point. Now, are they all under the same program, or is that something completely different? If you have an educator that's out there or someone that works in the school, are they eligible for the same program?
Yes, it is, as long as they're an educator. I mean, are you talking about like a custodian versus like a teacher?
I'm thinking more like a teacher.
Okay, so a teacher would definitely qualify. Custodian, I do have to check on that because on the guidelines it does say educator, but I think if they're in the school system, that is definitely I have to look at. So I don't know that 100%. So I can't say that for sure.
Yes, I definitely understand you, because the definition of educator and first responders are are changing slightly or evolving. So
So, I mean, I was surprised too when, when that CO came and talked to me, and,
mm,
he's considered a first responder, even though, like, we don't think of correction officers as being first, qualified as a first responder.
yes, yes.
So,
I'm seeing the same thing as well. I think not too long ago, I had a client that worked as just a medical technician, and they were automatically considered as, first responder. Because again, I was thinking of firefighters, nurses, and they fell in under the definition. So that's awesome. Any other interesting like loan programs out there that are unique that you could think of that might be important during this? Important, good to know during this time. Yeah.
I know bankruptcy has been a huge thing
Oh, okay.
lately, but it does come up quite a bit. We do have bankruptcy a year out, 3 years out, 2 years out. We used to, pre-COVID, we had bankruptcy loans that like a day out. And when I talked to the AE actually yesterday, that 1 day out is coming back soon. Unfortunately, we don't have it quite yet, but it is going to be available soon. A lot of the lenders are coming out of the COVID overlays, so it's taking a little bit of time, but we'll get there.
So what that means is that, or maybe I want to make sure I understand that. So someone that's in bankruptcy, that's coming out of bankruptcy, and like a day, 2 day, a year later, you have the loan products that allows them to be eligible for a purchase.
Yes, ma'am. Yes, we do.
Wow, that's amazing. That is amazing. Now, does that apply for people that are in foreclosure, short sale? I know we're not seeing a lot of that, but I'm forecasting that we're going to see more in the upcoming year. Now, are there products to help those people?
Yeah, so I mean, just like the bankruptcy, there are a lot of lenders are they're catering towards foreclosure and short sales as well too. I mean, folks who get into situations where they're kind of not really forced, but they're kind of moving that direction. So lenders are definitely catering to that. So if we could do a bankruptcy 1 day out, when it comes to foreclosures and short sales, the lenders can definitely do that as well.
Now, one of the things that I foresee coming is that we definitely had a lot of people that were either on furlough or laid off for a short period of time during the COVID, and they are returning to work, but now they probably didn't have a paycheck from that employer, 2 months ago, or they were on unemployment for 2 months and now they're back. How are you guys addressing or handling that when they want to buy a home now? They have the income and everything, they have the down payment, but they have a gap in their employment.
Okay, that's a very good question because it gets brought up all the time, especially we're post-COVID now. So I'm very fortunate to be with Nexa. A lot of lenders that we're working with are allowing borrowers to or borrow money as long as they're back to their regular pay, the regular hours pre-COVID. So if they can show their newest paycheck or just to reflect what they were making before, then we can definitely move on. So, and actually, I'm closing a couple this week based on that same scenario. So.
Got it. Wow, that's awesome. Because that's a question that I've been getting is, hey, do I need to wait 2 more months in order to, so I have 3 months of pay stubs to show because I have a 2-month gap in between. So that's awesome. So I'm going to transition us a little bit to refinance. The prices in our market now has just, it's skyrocketed. It's crazy out there. I can't even tell you. I have, offers that are 5 to 15,000 above asking price and are still not accepted because there's a higher offer out there. So I'm not sure what's going on, but this is a great market for people that are interested in selling, in particular people that are interested in refinancing. Because the value of their home obviously is much higher. What are some of the refi products out there that they can take advantage of so that they can pull out cash to either pay existing debt or pull out cash for another purchase? What are some of the products out there? What are you seeing?
Okay, so during COVID, there was virtually no cash out options. They're slowly starting to come back. So And I think we started getting ours back a couple of weeks ago. And we're back to kind of where pre-COVID is. If you're wanting to cash out, primary is still about 80%, secondary is still 80%,
Okay.
25%. We also have the DSCR, which you can cash out at 75% as well too. So for those investors out there that have DSCRs and they want to pull out more money to reinvest in other properties, you can definitely do that if you have 75% LTV.
Got it. Got it. Can you just define DSCR for our LTV for our listeners out there that aren't in the business 100% every day?
Yeah, so that's DSCR, debt service coverage ratio. This is big for a lot of investors, like I said in the beginning, where they don't actually show a lot of income on their tax returns, but they still want to invest, especially in the market. What you do is we just calculate the rental income and offsets the monthly payment PITI, and they will get approved. So the DSCR loans right now are about 80%, so LTV. So we're like I said, we're kind of back to pre-COVID. So.
Got
and
it.
When I get asked this a lot, a lot of investors, I want to get the no income verification loan. This is kind of one of those loans, the no income verification. So we use the rent to offset it. But with the DSCR, you do have to have a primary. So so if you're watching out there and you want to get DSCR but you don't have your own primary, that's just not going to work. So, right. So
makes sense. Makes sense.
Yep.
I think what kind of rates I know when we talk about rates, I'm sure everybody asks, what's the rates out there right now?
This is a big question, and I actually like to address this here too, because this is a great one. When you go into special programs or specialty programs, just keep in mind there's specialty for a reason. So I mean, if you're going to work and you're paying taxes and W-2, obviously you're going to get whatever the rate is out there right now, 3%, high twos, below threes or fours. But when it comes to special programs, I mean, obviously there's something missing, whether it be taxes or you're not, I don't know what it is, but borrowers, please get this. You're not going to get the 2% or 3% rate on a specialty program. Okay, so I just want to make that clear. All right, so when it comes to specialty programs, we're anywhere from 5 to 12%, depending on the scenario. And I say scenarios because I have borrowers with 800 credit score that's not going to qualify for the 3%. Lenders and banks are going to look at the whole scenario. What the risk factor is when it comes to lending to this borrower. Like I said, for example, I have a borrower that has 10 properties, the rental properties, and they have 800 credit score and they have very good income. But when you're going through the whole COVID and the banks are looking at the possibility that renters are going to furlough, they're going to not pay rent, that becomes a huge risk factor. So and that in turn, your rate's going to go up if you're trying to buy an investment when you have that big risk. So I just want to clarify that because I get calls all day. I have a perfect credit score. Why is my rate this way? Well, I mean, it's overall, and I do have to look at your FICO as well too. I mean, look at your history. And if you have a history of not wanting to pay or have issues with back, even if your credit score is 700, banks and lenders are still going to look at your history. So I'm glad I was able to get that out there because that is just, I mean, it's huge. Trust me when I tell you I get calls every day about that. So.
Yes, and I think that's definitely something that a lot of buyers should be aware of because they're hearing from people from the news that, hey, rates are at, I got a 3%, I got a 2.75. But there's a lot more that goes behind that. And so automatically in their mind, they're thinking, hey, I have a 780 credit score and I should be getting that 2.75. And how come I'm quoted at, 3.5? And so what I'm hearing from you is that a lot of time, if those are more of like your traditional or your products. If you met all the requirements, like you have a W-2, you're not on stated income, you have, great tax returns, or you have all the documents that's necessary, the credit scores. So you've checked all the box and you're getting that. But if you're going in some sort of a special program, then that means that there's something missing or there's additional requirements. So therefore, that rate can be slightly higher or different.
Yeah, or like the DSC loan, for example, they're not showing any type of income, or tax returns, or nothing like that. So they're just going to base it off whatever the rental is, and keep in mind, like we look at, not paying rent during the whole COVID-19. If you're going to base your income off that rent and they're not paying rent, well, that's an issue as well. So the risk goes up. So, and then also, loan to value is another thing too that folks really don't pay attention to, but I mean, and they shouldn't, whatever you have to put down is whatever you have to put down. But, someone that's putting 5% versus somebody that's going to put 25% down on his loan is going to make a difference on your interest rate as well too. So definitely. I just want to make that point clear, because trust me when I say, folks with 800 credit score, they just think they're gonna get the 2% interest rate, and I still get that call. Like, I even got one this morning. When am I gonna get the 2% interest rate?
Mm-hmm. So it's the overall picture, guys. We got
overall picture. We gotta look at the whole scenario.
Yeah.
We gotta look at the whole scenario. So.
Yes, that's awesome.
Yep.
So I want to transition. We talked a lot about mainly residential. Let's touch a little bit on commercial. Yeah. I know that, we have people out there. I'm actually working with a couple of folks right now that, what they're looking at doing is they're essentially, with the residential market so hot, they're selling their residential and they're 1031, exchanging it into commercial property. So they're either buying land, they're buying to hold, they're buying a commercial building, or whatever that may be. What kind of products are out there for these folks?
So with Nexa, we do have commercial loan options. They're more towards like when it comes to commercials, it's more towards investment. So I have lenders that will do multifamilies anywhere from 5 to 50 apartment buildings if you need. I have lenders that will lend on, if you have intentions of building like rental properties on vacant land, I have lenders that will lend on that as well too. I have lenders that will lend on working capital. So if you have a business and you want to expand, or you just need working capital to get your business going, I have lenders that will do that as well too. So and then fix and flips it's huge right now. Everybody's doing fix and flips like yourself. Fix and flips and fix and holds. I do have lenders that will do that as well too.
Money lenders.
Many lenders, yeah. Mm-hmm. So farm money, I have a private money lender. So we have over 82 lenders that we work with. So if there's a loan and the loan can be done, I'm 100% sure, 99% sure that I can get it done. So if it's out there.
Got it. That's awesome, because for those of you that are not familiar, I'll have you maybe briefly define hard money, private money lenders. I think most people are familiar with a traditional lender like yourself, but you could technically have, hard money lenders out there that would charge you a slightly higher rate. Maybe let's talk a little bit about that. What's really, when do you use a hard money lender and a private lender?
So hard money lenders are, that's pretty much not the last resort. I think private money is going to be the last resort. Hard money is very close to the last resort. We would exhaust the regular traditional lending. We would look at all the specialty lending that we possibly can do, and then the very last we would go hard money. And hard money, and the guidelines are a little bit easier. They don't require as much, but you're right. The interest rate is a little bit higher on the hard money, just so folks can get into the house. So, it's definitely a loan that can help you out. But when you think long term, it's probably not a good loan. A lot of hard money lenders are going to be maybe interest only, 2 years interest only, 5 years interest only. So it's a good loan to get into a house. But if you're thinking about staying with that loan for 30 years, it's probably not a good idea. But then the private money lenders, it's just folks that, like I said, it's my last resort if I need to go to find a private money lender. They're usually very open when it comes to lending, but there's at the same time, my private money lenders do require a credit score, because they want to know if you're going to repay this, or your history as far as repaying money. Mm-hmm. But those are usually my last resort when it comes to lending. So, but if you have to get in that house and you really love that house, and you know, all the traditional and specialty loans don't apply, this would be a last resort.
So essentially, kind of going from the top down, you start with your regular traditional lending, which
Yes.
is, technically your W-2, or your stated income. And then you go into a specialty program, which would have, slightly higher interest rate, but it also provides additional, maybe looser requirements or lesser requirements.
Yes, lesser requirements,
Yeah.
yes.
And then we have hard money loans, which are traditionally, from what I've seen and what I've used, is really just really short term.
Short term, yes.
Lot,
Interest only,
yeah,
a lot is interest only, yes.
yes, for fix and flips, for maybe even potentially acquisition of like a piece of land that you're gonna then build on it. I mean, just I'm thinking very short term.
Short term, yes.
Rates are really relatively high. There's fees on it, but it's because there's also a lot of risks associated.
A lot of risk.
Yeah.
Yeah. I mean, back to what we were talking about, you know, when I mean, you can have an 800 credit score, but if you have just issues and then you have to go this route, even with 800 credit score, the hard money lender is going to charge what they charge. You're not going to get the 2% or 3%. When you think about the loan, it's a huge risk when it comes to when it comes to a loan. So.
Yes, definitely. And then last but not least is your private lender, which would be like it's almost kind of like lending from your relatives in a way.
Your relative, yeah. Well, I mean, your relative is not going to hit you as hard, you know.
Yes.
I mean, it's coming from somebody that's, I mean, they're looking at the risk, and the return for them is a little higher because the interest rate's higher. But at the same time, they could potentially, you know, lose that loan because if you don't pay it, then they have to go through the whole court system, and it becomes more costly for them. So.
Yes. So that would be your last alternative.
Yeah, that would be the very last alternative. So, and then if we have to go that route, usually the borrowers would have to come up with 30% of whatever that loan is. So, I mean, that is the very, very last resort.
Mm-hmm. Awesome. Anything else you want to add? How can our buyers out there, what can they do to really help them stand out from getting their offer accepted from a lending side? I think you and I chat the other day about a client of ours, and you were able to share a strategy, the DU. I wanted to, maybe you can elaborate on that. People don't know about that.
So I think post-COVID, this is the new thing, you know. Everybody wants to be sure that when they accept this offer that there's not going to have any issues. So
yes.
What I've been doing is attaching a DU approval as well too. So it makes that offer a little more stronger. I do have some clients that if they're really interested in that house, you know, they would write a letter to the listing agent or the seller,
yes.
you know, just kind of describing, you know, how this house would you know, help them. So anything like that, anything that you think that would entice the seller, I say go for it. You know,
yes.
Anything that can make your offer stronger is always a good thing.
That's exactly what's happening, is that, you're in competition with so many people. You're not talking about 3 offers. I'm seeing, at least from what I'm hearing from the listing agents, they're getting 5+ offers. And and within, these homes are going pending within 3 to 5 days max. 5 days is because maybe they couldn't show the first 2 days or something. But if they're able to show the day they listed, really pending, they go on pending within 3 days.
Sometimes a couple hours after it gets listed. So it's crazy. I mean, I had a client that was going against 26 offers on one house.
Yeah.
I had a client that the winning bid was $55,000 over asking price. So
wow.
The market today is it's definitely it's crazy. That's the least I can say.
It is. It's super crazy. So I really like that tip of using the DU to really help, make your offer a little stand out or unique from the other offers, because right now, definitely everybody's writing a letter. Everybody is, putting their best offer out there above list price. They're putting X amount of earnest deposit. So everybody's coming in with a strong offer, but we need to find a way to continually differentiate
Yeah,
ourselves from everyone else just to be able to get an acceptance.
you got to make yourself stand out. I
Yeah,
agree 100%. So I mean, sometimes if you're going over the asking price, so is everybody else. So you got to
yeah.
be creative and come up with something that's gonna make you stand out. So and then like I said, the DU thing is it's new. I've got a lot of requests for that, so I figured it's gonna help all my buyers. So I've been doing that too, pretty much with every pre-approval. So.
That's awesome. Awesome. Well, thank you so much for your time. This is awesome. I think this can be so helpful for so many people out there that are in the process of buying or considering to jump in and buy something for their family or an investment, a second property, a rental. So I definitely appreciate your time. Maybe if you can just share your email, best contact info in case anyone wants to follow up with you, they can connect with you and
Yeah,
answer.
so I'm going to share them in a second, but there's a couple things that I want to just say real quick. I think the biggest thing is you being a realtor. I'm sure you see it all the time. Clients or borrowers, please talk to a loan officer like myself or any loan officer. See what you qualify for. I mean, first and foremost, before you start looking, before you call a realtor, because that's key. If you're going out there looking at houses that, I mean, essentially you probably make good money, but for like I said in the beginning, we have to look at your entire scenario. We're gonna see what your debt looks like, and everything. So if you're out there looking at houses that's just a little, beyond your reach, and you come to me after you fall in love with this house, and I tell you can't buy this house, I hate to be that guy. I don't want to be that guy. So, and it's happened more times than I can count. And like I said, it's just it breaks my heart sometimes, and I see how much the borrower loves the house, but for me to tell them, I'm sorry, either we got. I mean, if you really want this house, we need to make some adjustments, and I'll help my borrowers too. If there's a certain price range or certain type of house they want to get, I'll work with them and to see what we can do to get into that house. But just keep in mind, if you see that house, by the time you're ready for it, it's probably gone. So I don't want to get your hopes up and then lose that. So, be prepared and come talk to one of us. We'll probably, kind of guide you. And if it's little things that you need to work on, that's what we're here for. We're here to help you to get in the house that you want. But don't go look at it and then come back and tell me come tell me that this is what I want right now. And then if I can get you in there, that's 100% great. But if we have to work on certain things, that house is probably not going to be there when you're ready. So, and my name is Dat Vong. I'm with Nexa Mortgage. My email address is dvong@nexamortgage.com. You can always reach me at 559-470-5708. I work all the time, so if I miss your call for whatever reason, I'll get back to you. But I love my job. I love what I do, and I love helping first-time home buyers. I just love helping people build wealth too. So I think I'm in this job for that particular reason. If you're thinking you want to invest in real estate, come talk to me. That's what I'm here for. So I mean, getting you into your first house is definitely, I love that. But building wealth and getting that, getting those investments under your belt is my initial goal. So.
Awesome. Well, thank you so much. I think that this information is phenomenal and it's going to definitely help a lot of people, those that are already in the game looking for it and those that are getting ready to. And I appreciate you saying that, hey, your first step isn't talking to a realtor. Your first step should really be talking to a loan officer to get yourself qualified and get your financial situated before you jump out and start shopping. So.
Yeah. I have a couple of borrowers that are in the same position, they love the house. Now we have to work on how to get that house. So it just becomes a little more difficult, when it comes to like my side. I have to rush. And a lot of times you can't rush to that. It takes time. I have borrowers that I've been working with for 2 years, to get them qualified. So just be patient when it comes to stuff like that. Don't rush into getting something that's going to you don't want to work to pay mortgage. You don't want to work to pay for your house. You definitely want to be comfortable. So, and it takes time to do that. So,
definitely. Well, yeah. That's a great advice. That's great advice.
Well,
So
Shelly, thank you very much for your time, and I really appreciate you reaching out to me and doing this video. It was great too. And I apologize to the viewers out there. I don't do videos very often, so I was a little off. I apologize. So, but reach out to me, call me. I'm here to help you guys out. If you have any questions, call.
well, thank you so much for your time, and I'm sure that we will be getting a lot more questions for you from our viewers out there. So feel free to please reach out to Dad and ask him those questions and figure out how you can build your financial and your real estate portfolio.
So last pitch, I do have a website out there for folks that want to get a quote but don't want to expose themselves. It's Central California Home Loans, and there is a quick quote button. So you want to hit the quote and just fill out, the little information. Doesn't require anything. I mean, I can shoot you back a quote. So if you have a quote in hand, you want to compare pricing without digging too deep. It's not going to require your social by any means, but I can kind of shoot you a quick quote and you can do your comparison.
That's awesome. Give us that website again.
It's centralcaliforniahomeloans.com.
Awesome. Awesome. Got that. All right. Well, thank you so much.
Thank you, Shelley. I'll talk to you later.
Bye.
Bye-bye.